Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the co-founder of Anthemis, Sean Park. Great to see you again.
Thank you, Elliott. Likewise, good to see you again. I'm happy to be here. Thanks for having me.
Before we get cracking, a bit like my voice right now, we're going to learn a little bit more about Anthemis. So, Sean, you support pre-seed and growth stage fintechs or companies that embed finance in their products and services. But I guess you would say that you're much more than just a VC in terms of the kind of impact that you seek to have.
We certainly aspire to that, and I think over the years, Amy and I created Anthemis coming up on 15 years ago, which both seems like a very long time and a very short time. But our aspiration was to be a catalyst for technology-enabled change in financial services. And we both had spent our entire careers in financial services up until then in large banks. And this was in the early noughties, and then into the late noughties. And we both had seen in our respective organizations, this is a time when the iPhone was released, when AWS was released in 2007, a very, very big year in retrospect. The internet was coming of age. All the fiber had been put in the ground in the late 90s and the early 2000s and was starting to light up. And it just seemed increasingly obvious to us that the world was going to change. And actually, it had started to change in many other industries. But finance was, a bit of a laggard, but I say a laggard in the sense of not legitimately so. Finance is a civilizationally critical infrastructure. It needs to work. At the time, Twitter had just been launched, and there was it used to keep crashing as it was growing. And so there was a saying for, I think you'll remember this, maybe some of the younger audience members might not, but there's no fail, it was called a fail whale. Twitter would just blow up at one point, almost every hour, because it was growing so quickly and they couldn't put enough servers online fast enough. So we had this expression in the early days of Anthemis is you can't have a fail whale in finance. So you can't build a financial app or a financial product, whether it's online or mobile or technology able or not, and have it not work. It's a critical infrastructure. And but that said, we saw also, I think the epiphany moment for both Amy and I is we were responsible for various technology initiatives, alongside our day jobs in the investment banks we were working. And we saw that, we realized that and this, we weren't the first ones to realize this. We actually, when we started looking into it, discovered a whole set of literature on it. But the large companies, find it very, very hard to adopt quickly new disruptive, or not disruptive, but just new ways of doing things. And actually, ironically, the more successful they are, the harder it is to do that. If it's not broke, don't fix it. And also, particularly in financial services, there is an innate conservatism that is appropriate, but can, there's a lot of inertia in that. And so, at the same time, we started to see, again, a little bit in our day jobs, a little bit in our personal lives as angel investors, an emerging cadre of financial services startups. This was before the word fintech was even coined, or Insurtech as a shorthand for that. Whereas previously there was very few. And one of our very first investments actually predates the official formation of Anthemis, was a company called Weatherbill, which was ultimately became Climate Corp, which is a weather derivatives platform. And this is in the mid noughties. And it really sort of, that and a few other companies gave us a sense that there is something here. And we also looked around, and one of my jobs when I was in the investment bank was running our principal strategic investments. Today, that would be more likely called corporate venture capital. And, through that, I got to know the venture capital community, mostly in London, but also a little bit in Silicon Valley, and the growth private equity business as partners or co-investors. And it became apparent to us also that there was there was actually no venture firms focused on financial services, and there was a few individual partners at venture firms, but literally you could count them on the fingers of one hand. And so we thought, okay, there's an emerging opportunity. and the startups are coming, the investors are going to need to come. And the last pillar, to come back to your framing of our thesis, was rather than just build a traditional venture capital firm, and there's nothing wrong with that, but we thought, given our backgrounds, given our networks, given our insight, the thinking, and given the nature of financial services as this critical infrastructure and highly regulated and needing to be robust and work, we had a hypothesis, which I feel has proved out over 15 years, that the disruption and or change or evolution in financial services wasn't going to happen in these giant sort of blue ocean leaps. It was going to be co-creation and evolutionary, with startups leading the charge, probably in terms of ideation and building and testing new business models and new technologies, but working hand in hand with the existing financial institutions, banks, insurance companies, exchanges, and what have you. And so we wanted to build Anthemis almost as a piece of middleware, connecting. Today, you'd probably call it an orchestration platform to connect those various parts of the ecosystem through. The day job, the iceberg above the water, was by investing capital in entrepreneurs and businesses operating in financial services.
And Sean, just because I want to move on to the next section, maybe you can just, I remember asking you this question at the Paris Fintech Forum, and I don't think you actually answered it because I watched it back. What are your top 3 investments to date, and what are your worst 3 investments to date?
Oh, top 3 investments. In terms of, I guess you'd have to limit it to maybe exits, because we have a number of investments where we don't know yet. They're quite promising. Climate Corp was one of them that was sold to Monsanto in 2016, if I recall, for about $1 billion. But actually, that was a big deal, $1 billion. I think it was even before the term unicorn was coined. That was a great outcome for us. Currency Cloud was also one of our earliest investments. I don't know if you're familiar with them. They were sold to Visa just before COVID. So I guess that would have been in 2019, if memory serves. Also approximately $1 billion exit. And maybe I'll stick my neck out we have a number. We have we've invested in over 200 companies over the 15 years, of which about 150, 160 are still live, haven't been exited or haven't been shut down. And so there's a big amount to choose from, but I'll stick my neck out with one where we're still investors and is still going strong and growing strongly is Tide, the UK small business financial platform. Doing exceptionally well, and we see a very, very bright future for them as they expand, as they continue to grow in the UK and expand into places like India and Germany. In terms of our 3 worst investments, well, the way worst is a little bit harder in the sense of what worst in what sense? Worst financially, or worst in terms of hindsight or so there's lots of investments that we've made that have, returned 0 or very little capital. That's the nature of investing in early stage. But I would distinguish between, there's things that you go into knowing sort of, you always believe you understand the risks or do your best job to understand the risks and then mitigate those. Sometimes that's not possible. I would say, well, actually, and there's 2 categories. One is another thing that's very important in venture investing is timing. So I would say maybe a company like Trove, where I think we were too early and they didn't execute on their vision in the way that we thought that they would.
Okay, so we've now heard about Anthemis. Let's now learn a little bit more about Sean. So, Sean, you're from Calgary, but I understand based in Geneva. Was having snow and mountains the main driver for where you were going to kind of live?
That's quite perceptive. It was one of 2 factors, really. Before moving to Geneva 15 years ago, when we started Anthemis, I was living in London, and before that Paris. starting a company was the first time I had sort of more freedom to decide with my wife and my family where we want to live. And so that was definitely a factor. We're both avid skiers and wanted to be closer to the mountains and sort of, I guess, closer to nature in general. And Geneva is fabulous for that. But the other factor, which is probably even more important, but I don't want to dismiss that, you're again, a lot of perception there, was my wife is French and we have a bilingual family. And we felt that if we had, my children, when we moved to Geneva, my eldest children were just finishing primary school. And we sort of felt that if we'd stayed in London, that they would, they obviously would still know how to speak French, but they would lose their sort of maternal bilingualism. And so that was a big driver for us moving to Geneva, which is is a very, very, international city where most people, I think, are trilingual or multilingual, not only bilinguals.
And of course,
Um,
c'est possible de parler le français bien en Angleterre. But I was going to ask
voilà.
you, you mentioned the skiing, Sean. You mentioned the skiing, and actually, I guess maybe your bio might be a little bit out of date because it says there that you haven't given up your dream of skiing for the Olympics. But if you're now less likely to achieve that, perhaps you'll be able to live vicariously through your kids?
Yeah, no, that's right. I think it is. That's a good reminder. I need to update that. When I wrote that, it was tongue in cheek, but I was actually still doing a little bit of recreational masters ski racing for fun. I don't even do that anymore. But my children are all avid skiers, and actually my youngest, who is just coming up on 20, he skis he's on the Canadian national junior team, and there's a long way to go. It's very competitive, but he could maybe realize that dream. We'll see. He's on his way, but there's still a big mountain to climb. No pun intended.
Okay, well, we'll watch out for him at the Winter Olympics. So, look, Sean, a key part of this interview is to get your take on the future of finance. But first, we're going to take a very quick break, after which we're going to continue our conversation with Anthemis co-founder Sean Park. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. And now, Sean, let's talk about the future of finance. So, Sean, just going to start on artificial intelligence because it's inevitable that we have to talk about this. Earlier this year, I was reading a short while, recently, America's Census Bureau finding that in February, only about 5% of American firms of all sizes said that they used it, AI that is, and a further 7% said that they plan to adopt it within the next 6 months. You've got consultancies like BGC saying it's going to take about 2 years to move beyond the hype around AI. Is it all just hype when it comes to finance or investing or fintech, or is it already making a difference?
I think both, Elliot. There's a lot of hype, and there's the infamous Gartner hype cycle. I think we're right at the top of that, and there is a lot of noise. But that's not necessarily a bad thing. Certainly, at a societal level, it can be kind of difficult to navigate as a business person or an investor because how do you parse between signal and noise? And in generally, what I say, when you have these sort of I think the hype is not unjustified in the sense that this is a technological revolution or point in time that we'll look back on and as being very significant. Just to give a couple recent examples. One would be, I mentioned earlier, 2007, the iPhone and Amazon Web Services, so cloud and mobile happening at the same time. Going further back, the advent of the internet in the early 90s, and then maybe the one that started off this this information technological revolution, the Intel microprocessor in 1972. So you have these punctuated breakthroughs, and there's a lot of literature on this. Actually, over the years we worked closely with a woman called Carlota Perez, who's an economist who literally wrote the book on this, technological revolutions and financial capital. And I think in that context, AI is one of those things that we'll look back and look at 2022, 23, 24 as the dawn of this next paradigm of AI enabled everything, really. That said, if you take, and especially recent history, over time, if you go back 100 or 200 years of these sort of technological punctuation points, there is an acceleration of adoption. But the last one is a good example. '07 to sort of today, it takes about 15 to 20 years for these technologies to become ubiquitous and just part of how the world works and how business is done. So if you think of cloud computing and mobile telephony or that whole paradigm, I think it's reasonably controversial to say like that is how the world operates, and that's sort of been fully adopted by the world. Not to say that there can't be progress or changes. AI, perhaps it happens a little bit more quickly than that, but I think it's a question of years and maybe for it to be fully absorbed, and that creates a real opportunity space and a challenge for, again, both businesses and investors. So I think right now we're maybe just exiting the first wave of like, oh my God, as you said, everyone has to talk about it. It's in every boardroom, it's on every earnings call, it's in every VC meeting. Every startup that's pitching now has an AI slide in its deck. I think we're maybe at the end of that chapter or preface of, okay, looking at it a little bit more substantively, not because that was just all hype and ridiculous, but because it is real and it's important, but it's nuanced. And I think particularly in financial services, because of the regulatory and the privacy issues, there's a lot to figure out. And and the nature of, for instance, we see, as I said, almost every startup pitch now has some component of how they're going to use AI to enable what the problem they're trying to solve or solve better than it's being solved now. But in many cases, it's unclear, partly because it's unclear because they haven't really articulated yet, but partly even if they have, the other side is not ready yet. It's unclear whether their proposed solution or frameworks or business models would be compliant from a regulatory point of view. And again, sometimes it's clear that it wouldn't be, at least not today. And sometimes there's just so much uncertainty, like the rules haven't been established yet or trying to apply. You see this most in the US because the SEC is such an activist regulator. The UK, the FCA is a little bit more pragmatic and sort of almost case law. But in the US, you see this where, they're trying, the first instinct is to take a law that was written sometimes in like the 1950s or 70s, probably more likely in the 70s or 80s, and apply it to an AI context. And it's like, it's super kludgy. So anyhow, I think there's a whole bunch of work that needs to be done over the next few years, ideally hand in hand with regulators and legislators, to understand how to operate in a compliant way in an AI world, in finance, AI in general, but in finance in particular.
Of course, but I mean, even in the United States, regulations do evolve. Case in point being allowing Bitcoin ETFs, for example, in the United States. Obviously, in the UK, they also evolve, and across Europe. So let's assume that regulators manage to get a grip and to kind of evolve with technologies. What would your hopes be for the impact of AI in the fintech space, whether it's, making investments, perfectly matched to the person's risk profile, or even allowing you to kind of, put your feet up or just stay skiing while it chooses the best startups or pitches to kind of, sift through. What, do you genuinely hope, assuming regulations, allow them to come to be? What are your hopes for AI? Maybe just give me a couple of examples.
That's a great question. And for what it's worth, I do believe that with a lag, regulation follows the industry. And I emphatically, and we built Anthemis from day one on this, believe that regulation in financial services in any systemically critical infrastructure, energy, financial services, health, etc., is actually absolutely paramount. And it's that the trade-off between innovation and free markets and regulation to make sure that the harm reduction and caution in these things that cannot fail is there. So we've had a vision, and actually I think it might still be on the internet somewhere if you search YouTube. I did a sort of a thinking thought piece in 2005 about the future, and one of the sort of told as a narrative coming from the future. And one of the things that we invented in this narrative, or I invented in this narrative, was something called PALM, Perfect Asset Liability Management. And the idea was that with enough compute power and storage power, and I think AI is the missing link actually, that every individual, every business, everything could be optimized on an individual level. And that's only that was sort of theoretically always possible, but to actually enact that would take ubiquitous and almost free and infinite compute and storage power and analytical power. And AI, I think, is that. So, the way we think this is going is that ultimately, and this is at a foundational level, the lens through which we look at our investment thesis. I can come back to path dependency being very important, but looking 10, 15, 20, 25 years in the future. So not science fiction two decades in the future, but not tomorrow, is a world where finance becomes increasingly invisible. And that will be very new and unique to our world, because in the modern world, and when I say modern world, going back to the Industrial Revolution at least, if not before, finance has always been sort of bolted onto the side of our economy, our society, and very, very visible. It's not a perfect metaphor or analogy, but I think it's useful. If you think of like energy systems or electrical systems, those were once 100 years ago or 150 years ago, bolted on. You built a generator beside your home if you were wealthy, or your factory, and everything was sort of bespoke and wired and very, very present. Over the last century, that has evolved into a mostly invisible infrastructure, enormously complex, absolutely critical, but that for the most part, the vast majority of people and businesses don't see. The only time they actually see it is when it fails, and that's a good thing. And I think that our vision of finances in the future is it should, we were one of the first to sort of talk about and popularize the idea of embedded finance. That's sort of a first phase of that. The ultimate phase, in our view, is for lack of a better acronym, invisible finance. And that's not to say that finance will be even more important, and it will probably be even more complex, but it will just be hidden from view, and not hidden in a bad sort of way in terms of trying to obfuscate, but hidden because it will just be an enabler for people and businesses and our societies to get stuff done. A little bit the way that like energy or water system, what maybe in the UK they're thinking differently about the visibility of the water system these days, but these critical infrastructures. So and we think AI is probably the last step in terms of enabling that vision and pulling it all together.
Right. I guess to a degree, money is already becoming invisible. I mean, I when I go traveling, I never use cash anymore, and I guess that's perhaps one way that in future things will be following in that path to become invisible as well. But look, Sean, it's actually now time for our round of rapid fire questions. Are you ready?
I'm ready, Elliott.
So I'm going to put 90 seconds on my phone timer. And if you can just give me one word answers, that would be ideal. And we'll try and get through as many as possible. So here we go. Away we go. What fintech segment has the biggest potential over the next 5 years?
Small business finance.
What's the biggest pain point in your everyday financial life you'd like to see resolved?
Aggregated reporting, in particular for tax purposes.
Are bank bosses ready for the AI revolution?
Mostly. I think so.
Are customers ready?
Yes, I think they are.
Okay. Have regulators in the EU and US kept pace with all the new possibilities and behaviors we're seeing in the financial industry?
No, but I think they're doing a very creditable job.
Have you personally ever invested in crypto?
Yes,
Are physical points of sales part of the future of finance?
possibly.
Are bank branches part of the future of finance?
Probably.
On a scale of 1 to 10, 10 the most likely, 1 the least likely, what are the chances that in the next 10 years, one of the neobanks will be as profitable as a top-tier legacy bank?
Globally or in a particular country?
Just
Globally, yes.
Just-
8.
no,
Sorry.
between 8 out of 10. All right. And on that note, we are actually out of time for our round of rapid fire questions. And unfortunately for our conversation, because I know, Sean, that we could probably chat for several hours and still have more to talk about. So really just want to thank you, Sean Park, Anthemis co-founder, for joining me today. Thank you so much.
Thank you, Elliott. It was a pleasure.
And for everyone watching, we will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on X, as it's now known, at Paris Fin Forum. That's all for now. See you next time. Bye-bye.